And we are ready to roll. God, the Godfather. Gotta love that name. Krazy, Geo, JP, Mimi's Faves, Stanley, Butch. How are you guys doing? Beauty and the. Okay, that's just empty. Tim Bauer, Danny, what's happening? Roger Gonzalez, how are you doing? Enjoy, back again. How are you tonight? JTG, what's happening? Shrunley, interesting. Henry, how are you doing? Crypto Sean, what's happening? Crypto Sean, Endless Trucking, Sandman, 1626. How are you guys doing this evening? Little Lounge, Gilbert, Dirk, Flipper, GGG, what's happening? 3G, Van, Benjamin, how are you guys doing this evening? Bring that. How do we get started? Okay, bring that first and foremost. Hi, hello is usually the way we start up conversations here. Hi, how are you doing? Wonderful, wonderful, wonderful. How do you get started? You basically got to make the, what do you call it? Got to make the decision to do so, and then you just go by the steps. What is it you're looking to do? How is it that I can help you? Send me a DM. We'll have a chat. Seriously, send me a number. I personally will give you a call. Enjoy, sir. Can I get your WhatsApp number, please? Dude, I don't do WhatsApp. Terribly sorry. I'm on TikTok. I'm on YouTube. I'm on Facebook. I'm on Instagram. I don't do WhatsApp. Sorry about that. Bring that. Thank you. You're welcome. Flipper, how are you? Julie, how are you doing? Sinette, wonderful, wonderful. George Valeres, how you doing? Pat Lou, cool beans. All right, so we got enough people here. Let's get started. First and foremost, my name is James. This is a Dividend Stock Talk. I have a couple of simple rules. Please listen closely. Okay, please listen closely. Here we go. Number one. What are you going to do if TikTok gets canceled? Well, I'm on 2 channels on YouTube, 5 channels on Facebook, 1 channel on Instagram, Rumble, what's that other one? X. What the hell is that? What it has? That Twitter. And I'm trying to get on Truth Social. They're not making it as easy as it should be. Andrea, you are on the West Coast. I find it easier to be in the earlier group, but thank you for doing this. Now, Andrea, I am trying to see, is it better over on the West Coast or are the people on the East Coast better? So for those of you who, okay, Instagram, that would be the 10-minute trader. Okay, just look up Dividend Stock Talk in Google. It'll give you all the ways you can get a hold of me. Okay, Dividend Stock Talk in Google. It'll tell you how to get a hold of me. So you guys here, here's the thing. I am doing a simple little test. Are the people on the West Coast more interested in their own personal finances than the people on the East Coast? So on the East Coast, we have an average about 250 people show up a night. Well, average about 4,000 to 6,000 people show up every night, and about 150 to 200 stay and continue to watch. Over on the West Coast, well, your high so far is 8,000 people showing up and 360 hanging out. Well, right now we're at 130. Not impressed with you West Coasters, but let's give you the benefit of the doubt. Now, I do live in St. Petersburg, Florida. It is midnight here. I do realize people on the West Coast don't have the same time frame that we do over here. Absolutely, Alex, I did long time ago. Tried it, didn't like it. It was quick, right to the point. Okay, question. No dividend, but 3D3F long-term hold. Yeah, sorry, Cool Hand Luke. Cool Hand Luke, what we have here is a failure to communicate. So, Cool Hand Luke, I don't do anything long-term. My idea of long-term is 30 days. That's it. Okay? I got married once. I was intending to be married for my whole life, but apparently the woman did not think the same. It is what it is. Okay? So WW wants to take a look at T-Mobile. Okay, I like T-Mobile. We'll take a look at it. So Cool Hand Luke, no dividends, no thank you. Okay, enjoy. I have followed you on TikTok. Cool. Well, then you'll know where I am. So here's the thing. I'm only asking for a very few simple rules. Number one, only ask the question once. I will answer each and every individual question. if it seems I'm not answering your question as fast as you would like me to. Just remember, you're not the only one here. There's about 400 or 500 people here at this moment in time. I get Facebook, Instagram, TikTok, YouTube, and YouTube. I get 6 or 7 channels. Oh, and I got Rumble and another one. So I have a lot of channels going at once. I have a lot of questions coming at once. I will answer each and every single question. Please only ask it once. And here's the rules. If you want me to look at something, I please ask you to understand what it is you are investing in. Meaning, specifically, weekly options and a minimum of 2 decades. That's not 1 or 2 or 3 years. That is 20 years of consistent increased profitability. That means if the company is not consistently profitable, don't ask me to take a look at it. If it's a new company, don't ask me to take a look at it. If it's not a bare minimum of 20 years old, don't ask me to take a look at it. It does nothing but waste our time, and a lot of us will miss a good opportunity. T-Mobile, well, that is on the list. Let's take a look at T-Mobile, get the ball rolling. Let me tell you what I'm looking at. Now, I created this strategy for my 9-year-old daughter. It had to be, are you ready? Simple, safe, predictable, consistent, and no way for her to lose. So, in order to achieve that, 5 rules. Never buy something you don't understand. Basically, that means if you do not understand what you're asking me to take a look at, you should not be buying it. That's just my opinion. You can buy whatever you want, but my rule, never buy something you don't understand, okay? Rule number 2, never sell at a loss. It defeats the purpose of the whole game, and do not kid yourself, it is a game. It has certain rules. Rule number 3, make sure the company is consistently profitable. What do I mean? 2 decades of consistent profitability. If you do not know if the company has 20 years of profitability, don't ask. It's that simple. Don't invest in something you don't understand. Rule number 4, weekly options only. When I say I want a simple, safe, predictable, consistent 1% per week, the only way I'm going to get that is with weekly options or sitting in front of my computer all day long. Yeah, that just ain't gonna happen, okay? I like to be on my computer for 5, 10, 15 minutes doing my trading every day. 5 or 10 minutes, that's it. It's not that difficult. Remember what I said. This was created for a 9-year-old little girl. Simple, safe, predictable, consistent, 1% per week. If you do not know how to count, 1% a week is over 50% per year. If 50% per year sounds good to you, sit back, relax. I will take a look at a bunch of stocks you guys asked me to take a look at. I will do some examples for you to see what it is I'm doing. And I will make you this promise right here. I am not trying to sell you anything. I am a Gen Xer. I am tired of the little guy getting shit on, okay? Yes, I am a little guy. I've been a little guy my whole life. My mother was a single mother with 6 kids. We were welfare. My dad was not around. So, here I am. I am sharing what I have learned over the last 20 years of doing this. So, this is to you for free. Simple, safe, predictable, consistent, 1% per week. Let's get the ball rolling. First one we're going to look at today is T-Mobile. Okay? TMUS. Well, it might be better if I clicked on this first and then did again. TMUS. Okay, T-Mobile. I like to make this quick, simple, right to the point. I do not believe in blowing smoke. I do not believe in fluff. Okay? Simple. 5 things I'm looking at. Every time I look at a chart, 5. Are you ready? And it should take you 2 to 3 seconds. Seriously, 2 to 3 seconds. Are you ready? 5 things. High, low, where was it? Where is it? What direction is it going? That's it. High, low, where was it? Where is it? What direction is it going? Up, down. That's it. Do not make it more complicated than it needs to be. Simplicity is key here. All right, so I like T-Mobile. The chart doesn't look that bad. I don't like buying at the high Doesn't make any sense. When's the last time you heard somebody say, hey, T-Mobile's at the absolute high of the year. Let's buy it and wait for it to go higher. No, I've never heard people say that. What I hear all the time is buy low, sell high. That makes sense. So when it's down low or when it goes up, pulls back, that's the time. See here, look, here's the high, it pulled back. Here is where I want to buy. It pulled back because when she goes up, what do you think is going to happen? Okay, I'm going to tell you, when the stock goes from 160, jumps up to 250, you're going to get assholes like me saying, I'm taking my money and I'm running, and then the stock drops. Well, when the stock goes up, take your profits, because I tell you what, it's not a profit until you take it. So let's take a quick look. Dakota Kid, T-Mobile is about to blow fluff. CEO doesn't know karate or even oh my goodness. Alrighty, I don't want to talk about karate, dude. We said this earlier. Okay, so T-Mobile. Last year, we were at 163. We jumped all the way up to 247. And then we pulled back to 210. So let's take a look at the last 90 days. Well, here's the last 90 days. Remember, 5 things. High, low, where was it, where is it, what's the direction? Up and then down. Well, let's take a closer look. Now, that's the last 90 days. I'm looking for consistent movement. Okay? Up, down, up, down, up, down, up, down, up, down, up, down. Now it's going up again. Well, that looks pretty good. Well, let's zoom in a little bit tighter to look at the last 30 days, because the last 30 days gives me a great idea of where do I expect it to be next. Now, we're going to be jumping in on Friday because there's no trading tomorrow, all right? So, 30 days ago, we're at 235. The high was 237. We dropped all the way down 2 days ago, okay? 2 days ago, Monday, 30-day bottom, and she gapped down. I love a gap down. Now, the reason I like a 30-day bottom after a gap down, because gaps have a tendency to fill. This is T-Mobile. Here's your 30-day high. She drops from 237 down to 208. That's a $30 drop. That's a 15% drop from here to here. Well, great. No, we have 1 day, 2 days to the upside. I love 2 days to the upside. Okay? So, as she's going here, currently the price is at 215. So if I jump in at 215, okay, 215.85, the 217s are going for 170 to 211. That's not 1%. Unfortunately, T-Mobile is going to be a no. Check out favorite. It's just like TikTok. Okay. Oh boy. Here we go. I got 500 invested tonight. What do you think? Okay. I think you need to be consistent with your investments and find something you like. That's what I think. Alex wants to take a look at Pfizer. Okay, I looked at Pfizer about an hour ago because, believe it or not, this is my second show tonight. I was on at 9 p.m. Eastern Standard Time, which was 3 hours ago. Now I'm on at 9 p.m. Pacific Time for you guys. So let's see, is the West Coast better than the East Coast? Let's keep on going. Alex wants to take a look at Pfizer. PFE. Hey, Pfizer. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up. It's currently at 26.89. Did I have a stroke? What the hell kind of a question is that? It's currently at 26.89. The closest strike price is going to be the 27. I like the 27. 27 is right here, 29 cents. Now, I know 29 cents doesn't sound like a lot of money, but it is over 1%. That's what I'm looking for. Consistently 1% every single week. 1% every week is over 50% for the year. Okay, that's what I'm looking for, 1% a week. So I like Pfizer, so let's take a look. A year ago, Pfizer was at $29.59. Thank you, Joy. Have you noticed I am ignoring him? Some people, there's always one person on YouTube. I don't know, TikTok every once in a while there's a troll, but on YouTube there's a hell of a lot more trolls. They get on and they ask stupid questions. Anyway, the high of the year, 31.57. Well, the low of the year was what, last month at 24.45? Well, let's look at the last 90 days. Now, the last 90 days, why is it doing that? I hate it when it does that. There we go, that's better. Here's the last 90 days, okay? Highway over here, she drops down here, and then goes back up again. Simple. Adults have a tendency to make it more complicated than it needs to be. So the question would be, look at the last 30 days. The question would be, does it make sense to buy it now? Even though it is giving me more than 1%, which is what I'm looking for, the chart is telling me this is not the right time to buy it. Because 30 days ago, well, we're down here at 25. Then she shoots up to 27.60. Now, I know $2.50 doesn't sound like a lot to you guys because you're over in California. You're used to bigger numbers. But to me, $2.50 on a $25 stock is a 10% move in 30 days. So if you do not take your 10% profit from the bottom here to the top, that's a 10% move. Okay, you're going to have people like me taking profits. What happens? The stock drops. Well, today the stock already started to drop from yesterday's high. So it's going to be a no, as much as I like Pfizer. Now, I will put Pfizer on my list of stocks to look at in 3 weeks. Well, why? Because I think it's going to take 3 weeks to go from here all the way back down to here. And once it gets back down to here, guess what's going to happen? You're going to have guys like me saying, wait a second, Pfizer at 25 bucks? Hell yeah, I'm going to buy some. And then we do the same thing over again. Stocks go up, stocks go down, stocks go up, stocks go down. Now, what I like to do is I like to take a look and I like to watch. Because I watch twice a day, once in the morning with my private morning trading group, and then we take a look. What is it doing? And then I'm again here at night with you fine folks, looking at the exact same thing. So I look at everything twice a day. So I have a good idea where it's going. So I will put Pfizer on the list, and I'll take a look at it next week. I'll take a look at the week after. And then after the profit taking is done and over with, and she's back down here, she'll most likely go back up again. Because that's what stocks do. All right. So I'm writing Pfizer down for next week. PFE. All right. All right, next question. We're going up. Now, I will answer each and every question, so please just ask the question once. If it seems like I'm taking a long time to get to it, I'm going to apologize now. ND Cobb, TMFC. What the hell are you thinking here, dude? TMFC. Okay, Motley Fool. So apparently you weren't listening to what I say. Now, what happens when you don't listen to what I say? It does nothing but clog up everything, slow things down, and I have to say, hell no. Okay? That's a no. And the reason why I say that's a no, when I say weekly options only, there's a reason why I say weekly options only. You cannot get it's amazing. Okay, you cannot get weekly cash flow from a company that has monthly options. This is a huge difference. Monthly options, there's 12 months in a year. Great, I can do it 12 times. Weekly options, well, there's 52. I can do it 52 times. Now, I didn't go to college, but I do know 52 is better than 12. And the monthly, it just doesn't work. It boggles my mind when I say no monthlies and you still have me look at it anyway. Cool stuff by Jake. Cool, you're joking. Wonderful. Alex, did I miss the Devon Energy one? Yes, you did, dude. Sorry. Alex, what's he talking about? Alex, what I'm talking about is investing for weekly cash flow. 1% a week is 50% per year. Don't cast stones, made 50% without risk in 2 years in my last investment. Was that bad? No. Okay, you made 50% in 2 years. That's 25% per year. Okay? I made a hell of a lot more than that last year. Okay, I'll probably make a hell of a lot more than that this year. 1% per week is 52% per year. In 2 years, well, that's 100%. Okay, 1% per week compounded, you'll double your money within 16 months. Okay, you did 50% in 24 months. Okay, Cool Hand Luke, ADX. Well, ADX, I think, wait a second. ADX, I'm drawing a blank here. ADX. Okay, see, Cool Hand Luke. Basic investment, enjoy absolutely. So Cool Hand Luke, you're missing something. You're missing something. Okay, see, what I'm saying, you're not understanding. When I say weekly options only, why are you having me look at a company that has no options at all? ADX is a no. I honestly don't care what the chart looks like. I honestly don't care anything else. Consistent profitability, weekly options. That's it. That's the only 2 criteria I'm asking for. 20 years of consistent profitability and weekly options. ADX is a no. That's a no. What's the best platform to use? Now, that's a good question. Let's go, Brando. You know, some people have no idea what that means, but I do. The best platform to use is all going to depend on what it is you want. Everybody has their own goals in mind. So once you figure out what you want, then try to figure out what platform is best for you. I wrote a book about 12 years ago on choosing the right trading platform, where I actually looked at about 20 or 30 different trading platforms. But that was 15 years ago. I've been using this one for 20 years because I like it. Matt, are you shitting me really, Matt? ASML? ASML. See? Okay, well, here's an interesting one. ASML does have weekly options. It's at 743, a little out of my price range, but let's go and take a look and see how often has ASML increased their dividends. Now, if you didn't know, I think I closed Yahoo Finance. Yahoo Finance. We're gonna take a look at Yahoo Finance. You really should have on hand a website, a financial website that can allow you to look at numbers. I like Yahoo Finance, ASML. Okay, so if you didn't know, the screen behind me here is live on YouTube. So if you cannot see it on your iPhone, your iTablet, or your pad, or whatever, your phone, or your tablet, it's live on YouTube. So you can watch it on your big screen TV. Sorry. So I'm here in Yahoo Finance. I'm going to go over look at historical data. Historical data is going to tell me how wonderful ASML has increased its dividends consistently. Okay, so ASML, here we go. All right, okay, 8, 9, 10. 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. Okay, so it has not quite 20 years of dividends. So let's see how wonderful they increase. So in 2007, it's $2.84. Okay, great. But in 2008, they went from $2.84 down to 37. Okay, that's going backwards, Matt. Matt, do you realize this? Okay. Then from 2008 to 2009, they dropped the dividend again to 27. Okay, and then they went to 28, all right, higher, 54, higher, 59, higher, and then they did some crazy shit. They paid, okay, that is what you call a special dividend, $11.87. So from there, it went to 71 to 84 to 81. That's backwards, dude. 115, 131, 172, 239, 117. That's backwards again. 246, sorry, 146, 140, backwards again. 189, 209, 419, 140, backwards again. 134, backwards again. Okay, this is a hell no. Sorry, dude. Okay, I like consistent profits. Okay, when it goes from 209 to 419, well, that's freaking awesome. But when it goes from 419 to 140, that's over a 60% decrease. Why would you think a 60% decrease in profitability is a good thing? It's beyond me. Hey, Alex, we already looked at Pfizer. Okay? So, dude, I'm going to say no to ASML. Okay? Not consistently profitable, that's number one, and not 20 years of option increase. Not option increase, dividend increases. It's not consistently profitable. And so it's a no. Sorry, Matt. It may work for you, but it doesn't work for me. Pfizer, we already looked at Pfizer. They did combine with Starlink, so maybe. Okay, cool stuff by Jake. I honestly really don't care if they joined with Starlink. I do know for a fact that Starlink is not 20 years old. So that's a no. Can we talk about Main Street Capital? How about no? Main Street Capital is a monthly optionable stock. And when I say never invest in something you don't understand. So if you buy Main Street Capital, good, great for you. But apparently you don't understand it, so I don't know why you're buying it. When I say don't buy it unless you understand it, if you don't know that they only have monthly options and not weeklies, well, then you don't really understand where you're putting your money. That makes no sense to me. Sorry. Autosci. Oh, my goodness. Don't. If I hit the wrong button, everything goes away and I have to redo this thing. Okay, don't. What stock is that? Well, the stock we were just looking at, ASML, it's going to be a no. Out. O-side 96, apparently you weren't listening either. Could you explain the gaps? Yeah. I don't know why I need to explain a gap. Okay? Here's the price right here. All of a sudden, there's nothing here, and now it's down here. This is called a gap because there's nothing there. That's what a gap is. Okay, so the stock was here, $1,080, and now it dropped down to $980. So you lost $100 overnight. That's a gap down. That's a gap. There's nothing there. That's what a gap is. Okay, O-side 96, TSLA. So you really weren't paying attention. Seriously. When I say weekly options only, TSLA, no. When I say consistent profitability for a minimum of 20 consecutive years, TSLA is a no. Okay, if you think you're going to come up with something that I don't already know, I hate to be the bearer of bad news. You're not. I've been doing this for 20 years. I know for a fact TSLA is not 20 years old. Okay? They can't possibly have 20 years of increased profits if they're not 20 years old. It's basically, you should know what you're investing in. So when I say 20 years of increased profitability, if you are an investor, you should know what you're investing in. TSLA is not 20 years old. There's no possible way it could make the list. Okay, grinding 4124, we already looked at T-Mobile. I prefer not to. What are 2 to 3 good, solid holding stocks for the next decade? So apparently you weren't listening either. My idea of long term, 30 days. That's my idea of long term. I was married once. I have no desire to marry a stock. See, if you buy a stock, okay, listen closely. If you buy a stock, you will collect a dividend every 90 days if you're lucky. Some companies pay every 30 days. Wonderful. But I want weekly cash flow. So next decade does not make sense to me. I'm not buying now and worrying about in 10 years. Okay, if that's what you're looking for, you are definitely in the wrong place. You're wasting your time being here. I'm not looking. Do you understand what capital appreciation is? Capital appreciation is where you buy a stock here and it goes up, 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 and you're waiting for it to go up. Yeah, that's not it. You're in the wrong place. I have no desire for that whatsoever. I'm looking for, are you ready? Weekly cash flow. The only way I'm going to get weekly cash flow is through a dividend stock that is consistently profitable and has weekly options. Okay? Now, I like to think you guys on the West Coast are bright, but you're not listening. Okay? Weekly options only and consistent profitability. TSLA, again, you can ask me the question 10, 20, 30 times. It's still going to be no. Could you please explain gaps and how they work? They don't work. Okay, a gap is basically, okay, it was here, now it's here. That's all that means. That means the market maker, who's the one, decides what to open the stock at. Now, see, these numbers here, there's 5 numbers to remember, okay? The opening price of the day, the closing price of the day, the high of the day, the low of the day, and the volume, how many shares are being traded. Now, out of all those numbers, every single number but one is controlled by you and me, okay? High of the day, well, we figure out what's the high of the day. Low of the day, well, we figure that one out. How much volume, we figure that out. The closing of the day, we decide what that is. There's one number and only one number that is decided by one person. That is the opening price of the day, and that is done by the market maker. He wakes up in the morning and he says, you know what, I had a great day today. Let's open the stock up higher. Oh crap, I had a crappy day today. I had a fight with my wife. I'm going to open up down. Simplified, yes, but that's the idea of it. The market maker has control of what the opening price is. We decide how high, how low. If he opens it up here, and I say, wait a second, 980, it's worth more than that, let's buy something. And then the stock goes up. But he made it drop down, lost $100 here. Wait a second, why? I want to get rid of it before it goes down further. So he sells, and the stock drops. It's really not that difficult. Adults have a tendency to make it more complicated than it needs to be. Amanda. Wait a second, Amanda, you're, hold on. C. Jolly, E-B-I-T-A. E-B-I-T-A. I've never heard of it. E-B-I-T-A. Okay? We cannot find the symbol. So apparently, I have no idea what the hell that is. Jelly beans, Coca-Cola. That's K-O. Love Coca-Cola. They've been in business for over 100 years. They do fit the criteria. They're over 100 years old. They have 5, you ready? 5 decades of consistent increased profits. Yo, John, what up? All right, so they have over 5 decades of increased profits. Coca-Cola. Now, it's not like, why should I buy it? The question is, why shouldn't you? They've been in business for over 140 years. They're consistently profitable. Well, let's check it and see what a 1% trade looks like. High, low, where was it, where is it? What's the direction? Up, down, okay. 61.71. That's the current price right now. If I want to buy it, 61.71. All right, the closest strike price is going to be the 62. But the 62 is only going for 51 cents a share. That's not 1%. That is a no. Sorry. Is this your West Coast show? Yes, it is. This is the West Coast show. I'm kind of hoping you guys on the West Coast can save me from those East Coast people. Well, we'll see. Now, last night, I think we had 8,000 people show up last night. Well, let's see if we can have more. The only way that can happen is like, share, comment, all that crap. You know what that does. It creates the algorithm to get more people here, blah, 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 whatever. All right, so anyway, Coca-Cola, as much as I like it, two reasons why it's a no. Look at it, it's in a downward turn. But look, the bottom was yesterday. Today is a little higher. So maybe if you like Coca-Cola. Okay? But for me, it's going to be a no. And the reason why is the current price, 61.71. If I buy it here, the closest strike price is going to be the 62. But that's only going for 51 cents. That's not 1%. So that's going to be a no for me. Amanda, TDG. Amanda, I have no idea what that is. TDG. All right, you're the first woman I get to yell at today. Seriously, were you not listening? Monthly options don't work. I'm not even going to look at the chart. Don't care. I'm not even going to look at the numbers. I know it's a monthly. I know it's a no. Okay, and it comes to that second part. What the hell are you thinking? When I say no to monthly options, why are you asking me to look at one? Abdul, can you please explain gaps and how they work? Okay, Abdul, I already explained that one. Grinding 24, you're asking me the exact same question. Okay. This right here, come on. This right here is Target. Okay. Now Target is a dividend king. They have increased their dividends for more than 5 decades. They are consistently profitable. You want me to explain a gap? Well, here's one for you. Are you ready? It was at 156 right here. Do you see that? 156. The very next day, it's way down here at 128. That's a big drop. That is a big gap. There's nothing in between. That is called a gap. Okay, so when the stock is up here, if you do not take your profits, the market maker will take it away from you, because what he will do is, we're here at 156. Very next day, well, I'm going to open it up down here at 130. You just lost all this money. Whether you like it or not is totally irrelevant. Do you honestly think they care about your feelings? No, they do not. A gap down is when it goes from here and drops with no action whatsoever. So here's a Monday, here's a Tuesday. Okay, why did it drop? Well, it dropped because it had bad earnings. Okay, the earnings weren't as much as they thought it was going to be. So the market maker took that information, and from here on a Monday, he says, you know what? Tuesday, I'm going to open it up down here. Okay, the market maker is in charge of the opening of the day. He's the one in charge. He's the one that creates these gaps. It's the market maker. Ian wants to look at Oracle, ORCL. That is a good company. That is on the list. ORCL, Oracle. Now, first 5 things I always want to look at. High, low, where was it? Where is it? What's the direction? Up, down. Simple. Okay, last year we're at 100. Shoots all the way up to 200. That's 100% increase. Well, what do you think's going to happen when your stock doubles in price? You should be taking profits. That's exactly what happened. Here's the high, profit taken, it comes back down again. I don't know why people don't understand that. It goes up, you take your profits, you say thank you. If you don't take your profits, Don't bitch and moan. It was at 200. Now it's at 163. Well, you should have sold it when it was at 200. Okay? I'm not here to make you feel good. I'm just here to show you the numbers. That's it. You asked me to take a look at a stock. I'm looking at it. I'm going to give you my opinion. Okay, it was at 100 a year ago. It went all the way up to 200. Well, now it's at 163. If you did not take your profits at here at 200, it's your own damn fault. It is. It's not a profit until you take it. Plain and simple. Okay, I'm from the Generation X. I'm born in the 60s, raised in the 70s. Don't really care about your feelings. I honestly, there ain't no safe space here. You do something stupid, I'm going to tell you. If you don't take your profit, your own damn fault. Stocks go up, stocks go down. If you expect them to do anything else, you're mistaken. If it goes up, take your profits. If it goes down, don't sell at a loss. It doesn't make sense to sell at a loss. All right, so Oracle. A year ago, 101. Tops out at 198, right around 200. That's about double. Okay, but from there, from that high, she gaps down. Look at this. If you don't take your profit, market maker will take it away from you. Okay, so it went from 190 and it dropped all the way down to 178. So you lost 12 bucks because you didn't take your profits. And then it just kept dropping, dropping, dropping. Yesterday was the bottom. Okay, yesterday was the bottom. Today is one day to the upside. Now, I like jumping in when something like this happens. Because if it goes from 181 30 days ago down to 162, that's a $20 drop. That's a big drop. What usually happens? Usually, you got people like me and some of you guys out there, wait a second, that's a good deal, let me buy some. Then it starts to go back up again. Okay? They go up, they go down. They go up, they go down. That's all they do. The chart has nothing to do with the stock price. If another pandemic hits, it will drop regardless. A real chemist, I hate to be the bearer of bad news, okay? You can say whatever you like. Stocks go up, stocks go down. Now, for you to say the chart has nothing to do with the stock price, I'm not quite sure what you mean. Because during their pandemic, most stocks went down. Some stocks did go up. Money doesn't disappear. It changes hands. One will go down, another one will go up. Okay? All right. O side. Apparently you're not listening, dude. Okay? Now this is the second time you asked me to take a look at something. And when I say no dividends, no thank you, apparently you didn't understand that. Tesla, TSLA, has no dividends. They do not share their profits. It's not even on my list. I honestly, really, 100% do not care. I don't care about Tesla. If it doesn't have dividends, I don't want to even look at it. And I don't understand why you didn't understand that the first time you asked me about TSLY. No dividends, no thank you. Not 20 years old and not 20 years of increased profits, no thank you. Real chemists, you want to go head to head and argue about this, be more than glad to. Okay? But the chart price is exactly what we the buyers and sellers, perceive the value to be. Is it the value of the company? No, it's got nothing to, that doesn't have a lot to do with the company. What does have something to do with the company? Well, it's the book value. It's the profit, what's the word I'm looking for? The earnings per share, the profit is coming in on a consistent basis. The management team that you have available to it, the consistency of its profitability. There's a lot of things that have a lot to do with it. The stock price, yeah, this is what we the people think. When we think it's too high, well, that's as high as it's going to go. If we think it's too low, well, that's as low as it's going to go. Because once it gets down to here, you got people like me say, wait a second, Oracle at 162, that's a deal, I'm going to jump in. It has a lot to do with the stock price. Okay? Could you please explain, okay, I do. I mean, how many times you ask me to explain gaps and how they work, the answer's not going to change. When I ask you politely to ask a question once and only once, I will get to every single question. Okay, now there's about 300 or 400 people here in the audience. You're not the only one asking questions. So I do go answer questions as they come in. Please only ask the question once. The answer is not going to change. Same thing with you, OSI. TSLA, Tesla, no. Alex, nice. How about Abcut Boeing? Okay, Abcut, I have no idea. But Boeing, BA. Okay, here's Boeing. Okay, last year it was high. Drops down to here, shoots back up, pulls back, now we're here. Okay, so what's happening here? Before I do that, I want to see, am I going to make 1% off of this trade? Well, currently it's at 170, 175, so 172 is right here. 330, well, that's over 1%, so that is a possibility. So now I want to take a look at the chart. What is the chart telling me? Well, the chart is telling me what me and all the other investors are thinking. Well, what we're thinking is, hey, the stock dropped, got to a bottom right here, turned around and went up. That's what we, the buyers and sellers, are thinking about this company. Now let's take a closer look. A year ago was the high of the year, 234. Well, within the last 90 days, here's the bottom right here in the middle of November, 136.62. Okay? She went down, she shot up, now she pulled back. So what's happening here? And here, is it a good time to buy or not? Well, let's take a look. Okay, 30 days ago, okay, see today, this is today, 30 days ago, there's the 30-day bottom. She shoots up, she pulls back, now she's going sideways. Not really a great time to jump in. Okay, I like to go to the upside. So we pulled back right here. Here's your profit taking. Now she's going sideways. Where's she going next? Okay, so if you like Boeing, well, let's take a look at the numbers. The 172 is going for 330. All right, but what does it normally do? Normally, for that, we're going to look at something called the seasonality chart. Now, a seasonality chart, if you don't know, all the way to the left is January 1st, all the way to the right is December 31st. It is a one-year chart. It looks at the whole year. Okay? The blue up way over here, well, that's this year. The red is a 10-year moving average. What has it done in the last 10 years? What does it normally do? Well, I don't need to look at the whole year, because I jump in on a Monday, I like to be out on a Friday, so I'm not going to hold it all year long. So I want to look at this area here. I just want to look at January. That's it. CH, give me a second. Okay. January 1st, January 31st. What does it normally do? Well, we're right here now. Okay, we're right here now. This is today. Okay, she's basically going to go up, and then she's going to come down again by the end of the month, and then she's going to go back up again. No big moves to the upside, no big moves to the downside, nothing to see here, folks. Let's move on. So, do you like Boeing? That's question one. Do you like Boeing at this current price? That's question two. Is Boeing a company you feel you can buy and hold on to for the rest of your life or until it hits your target? So every single week, if you buy it at 170, 175, the current price, and you sell somebody the rights to buy it from you every single week and bring in 1% every single week, that's 50% per year. That's what I'm looking for. 1% simply, safely, predictably, consistently, 1% every single week. Okay, so CH, got a question. Do you think Comcast is a good time to trade? I see that it might be oversold. Well, let's take a look. Now, I like Comcast. I usually buy Comcast, CMCSA. All right, I'm going to say, this is just me. If this was me, that's all I'm going to say. If this was me, it would be a no at this moment. Let me explain. First thing, always, 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 I want to take a look at the chart. I'm looking for 5 things. The high, the low, where was it, where is it, and what's the direction? Down, up, down. It is in a free fall at the moment, meaning that eventually Okay, it might be tomorrow, it might be the next day, it might be the next day. We don't know until it shows up. It is looking for a bottom. Okay, last 30 days, we're here at 43.50. Okay, today is lower than yesterday, which is lower than the day before, which is lower than the day before. She's actually dropping, dropping, dropping until it finds the bottom. So if you really like Comcast, look at it again tomorrow. Okay, is it going to be higher or lower? Look at it again, not tomorrow, Friday. Look at it again on Monday. Is it going to be higher or lower? As soon as the bottom shows up. What do I mean by that? Okay, this right here looks like the bottom, and it could very well be. However, you don't know until you have something to compare it to. Well, you have something on the left side, but you have nothing on the right. So it could go down lower. So let's move it ahead one day. Okay? That's not the bottom. That's the bottom. Okay? The new low. Okay, so right here, December 9th, the low was 38.76. Okay, here's the numbers right up here. 38.76. The 10th, the bottom was 38.53. Okay, so here's the new bottom right there. Okay, let's go forward one day. Now that's plain C, it's one day to the upside. Here's your bottom, one day to the upside. 2 days to the upside, that's what I'm looking for. Now I can say, here's the bottom right there, because you have something to compare it to. On the left side, it's higher. On the right side, it's higher. 2 days. That's where I want to jump in the very next day. Nope, I wouldn't. Because see, the very next day, that tells me jump in the very next day if it's higher. It didn't. It went back down again. Okay? Now we have a new bottom right there. But is it really the bottom? Take a closer look. Okay, the very next day, even lower. Okay, well, what happens next? Even lower. And it will keep going until it's done. So how far did it go down? Well, let's keep looking. Up 1 day to the upside. Okay, 2 days to the upside. 3 days to the upside. 4 days to the upside. Now it came back down again. So you can't tell where a bottom is until you have something to compare it to. Okay, so as I was saying, Comcast. Okay, it keeps going down, 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 down. Today is a new bottom. Is tomorrow? Don't know. Is Friday? Don't know. Is Monday? Don't know. Well, when it gets here, we'll figure it out. CH. Uh-oh. Uh-oh. When the volume dries up, does that mean the bottom has been established or the price might start to reverse? Doesn't mean anything. All volume is how many shares are being traded. Okay? The low of the day tells you where the bottom is. And until it turns around and goes back up again, it will continue to go down because the trend keeps going until it stops and reverses. So today is the 30-day bottom. And so it will continue to go down until it's done. And it's actually that simple. It will continue going down until it is done. Simple. Keep going down until it's done. Okay, let's go. Brando wants to take a look at Home Depot. I love Home Depot. They're over 100 years old, consistently profitable, consistently increasing their dividends, and they have weekly options. It's really not that difficult, ladies and gentlemen. Okay, let's go back over here and put in Home Depot. Okay, we're going to do the same thing here. It's going to be a no only because it's dropping and we have a new bottom here. A new 30-day bottom. So today is lower than it was yesterday. Okay, so that's going to be a no. Not a no like never, never, like some of the stuff you guys asking, but not today. Not tomorrow. Wait until it turns around and starts going back up again. I don't even want to look at the numbers. It's totally irrelevant until this makes sense. I'm not even going to look at the numbers. It's just wasting our time. AMD, Advanced Micro Devices, S Hammer, you weren't listening either. When I say no dividends, no thank you, Advanced Micro Devices does not have dividends. That's a no. Wouldn't you like to know Weather Boy? Nope. Sybil, what program are you using to view these stocks? Okay, Sybil, it's not a program. This is a trading platform. Okay, so Robinhood is a trading platform. Webull is a trading platform. Okay, Think or Swim is a trading platform. Ozalier Jonah, Waste Management, another good company. Waste Management, here we go. Unfortunately, Waste Management is a monthly optionable stock. Good company, but it doesn't fit for me. If you like it, more power to you. Cool stuff by Jake. I'm digging what you're throwing down. I just learned a lot in a few seconds. Oh, hey, cool stuff. Cool bean. Hey, look at that. Calvin Hill's here again. How much do you pay in taxes? All right, C. Jolly, if you're asking me how much I pay in taxes, you really need to talk to a tax strategist or a tax planner, okay? Could you please, okay, so you got to stop that. FUBO. Oh, shit. FUBO. Okay, now, C. Jolly, I really, really, really need you to explain to me why you think a stock that is $1 has 20 years of consecutive increased dividends. Anthony Silva. Bro, why are you talking about making money using paper account? This is not a paper account. Okay? This is not a paper account. Okay? I have 7 accounts. 7. Okay? I share 3 of them. Okay? Now, the paper trading account, I trade consistently. And yes, I do have a paper trading account because if I'm going to screw up, I want to screw up here. Right? So, the question you should be asking, Anthony, is does it make sense? Okay? So whether I show you FUBO here, or if I show you FUBO here, okay, explain to me the difference between this and that. Well, wait a second. Let's go back again. Okay? Paper trading account. Cash account. What's the difference? There's no difference whatsoever. Okay? So you got to come at me a little bit better than that. Are the numbers different? No, they're not. They're the exact same. Okay? I've been trading for over 20 years. I still paper trade. I still use a paper trading account because, yeah, I do still make mistakes. Okay, Abu Sil. See, Sai? Okay, stop asking me about that question. How do you know the options? They're right here. These are the options right here. If the current stock price is $5, the options, call options, put options, $3.50, 4, $4.50, 5, $5.50, 6, so on and so forth. These are all the options for this stock for this week. Okay? This right here are the options for this week, and so on and so forth. Okay? So on and so forth. Each week has a different option. Abu Sai, SPY. Oh boy. I really thought you guys on the West Coast were a little bit smarter. Spider. Okay, SPY, S&P Index. Okay, now you may like it, you may think it's wonderful. It is currently at $589 a share. Okay, great. I'm going to show you something and you're going to say, ah, oh, damn, why didn't I know that? Well, when I say never buy something you don't understand. So let's go to Yahoo Finance and put in SPY, because that's what you want to look at, right? Well, here's the dividends for SPY. I'm not going to go all the way to the beginning. I'm just going to go to 2000. Okay? Here's 2000 right here. Now, I want you to listen closely. All right? March 17th, 2000, 37 cents a share. June 16th, 2000, 35. Now, explain to me, is 35 less than 37? Well, yeah. Well, why did it go down? Isn't it supposed to go up? Okay, so let's do a few more. 37, 35, going backwards. 38, 41, 32, backwards. 35, 37, 39. 33, backwards. 35, 38, 44, 35, backwards. We're going 2 steps forward, 1 step back. 36, 40, 40, 52, 40, 1 step forward, 2 steps back. What is the point here? Okay, it's not consistently profitable. Why are you putting your money into something that's not consistently profitable? That's number one. But wait, hold on. It gets worse. Really, honestly, it does. So you're putting your money into SPY. Great. Well, they're not consistently profitable. That's number one. Okay. They go up, they go down. They go up, they go down. They go up, they go down. Yeah. Okay. But here's the part where it gets worse. Are you ready? Okay. We're going over to the summary. The summary gives you the numbers. What's it doing? Well, SPY at the moment, right here, SPY 500 ETF Trust. SPY. Okay. So currently it's at $589. Okay, the PE ratio, 27.29. I don't know if that makes any sense to you, but this number right here should. Okay, the yield. What is the yield for the last year on SPY? 1.21%. Not for the week, not for the month, not for the quarter, for the year. So you put your money into Spider and you just earned yourself for 12 months of putting your money there 1.21%. You're losing money putting it into Spider. If you're making 1.2%, you're losing money. 1.2% for the year. How can you possibly say that's a good place to put your money? Okay, I do. Please stop asking me about the gaps. Anthony Silver, why am I using a paper trading account? Does it really bother you that I'm using a paper trading account? Seriously, this is not a paper trading account. Okay, let's go over to here. Okay, this here is a normal everyday account. It's got my profit and losses. It's got how much money is in there. It has all that kind of nice, neat, fun stuff. Okay, why does it bother you? Okay, seriously, why does it bother you? Do the numbers change? Okay, if it makes you feel better, I will use a regular account. I got 6 of them. It doesn't bother me, but it seems to bother you. The numbers aren't any different. Michael, good day, James. Do you ever hold on to stocks long term? No. I have watched you before, and I understand you trade on dividend stocks. I appreciate your time. Thank you. So, Anthony, please explain to me, why does it bother you that I use a paper trading account? Okay, I got 6 of them to choose from. Okay, come up here, look. Okay, I got all those to choose from. I got this one to choose from. And I have a few more to choose from. I just like using a paper trading account because this is where all my lists are. Okay, these are all my personal stock lists. This is where I keep them. This is where I do most of my training because it's simple, it's easy, and I don't get to show everybody my account numbers. Don't you need 100 years to sell options? Yeah, you do. Not really, but to do a covered call, you do. Sorry, I'm trying to find out where I left off in the questions. Right here. Okay, don't you need 100 shares to sell an option? For a covered call, you do. You need to have 100 shares to sell one covered call. Bro, it's called shorting. Anthony, I'm not quite sure. Why are you using paper and trading account? Okay. Okay, you asked me why am I using paper and trading account. Now I'm asking you, what, I told you why. Now I'm asking you, why is it important to you that I use a real account as opposed to a paper trading account? Are the numbers different? No, they're not. They're the exact same numbers, exact same strategy. Everything's the exact same. What are your thoughts on the dogs of the Dow? Well, are they consistently profitable? Do they have 20 years of increased dividends? Do they have weekly options? I honestly don't categorize my stocks in any other manner, way, shape, or form other than when are they paying their dividend. That's it. Because the dividend is a portion of the profits that the company shares. And a dividend tells me, is the company consistently profitable? Also, just before the dividend, the stock has a tendency to increase. Okay? That's why I want dividend stocks only. What about waste management? We already looked at waste management is a monthly optional stock. It doesn't make sense. Anthony, you still haven't answered my question. Okay, TSA was founded in 2000. Definitely 20 years old. Yeah, Anthony Silver. There's always one in a crowd who always thinks they know more than they really know. Okay, I didn't say Tesla was not 20 years old. I said Tesla has no dividends. Tesla does not have 20 years of consecutively increasing dividends. That's why it's a no. You also take a look at S&P. Well, that's Snap. Let's go back to here. S&P. Okay, so S&P, no options. Okay, you want me to look at a regular account? Here, let's go to a regular account. Okay, right here. Okay, let's go over here. Let's put in S&P. It says the exact same thing. No dividend, no options, no. Okay, so why does it really matter on which account it is? Because they both look the exact same to me. All right. Okay, so Anthony, yeah, it is 20 years old, but it doesn't have 20 years of increased dividends because it's one of the top performing companies. Yeah, okay, great. So Anthony, I got another question for you. Okay, it's a top performing company. Great, wonderful. How do you know when the company's going to increase in price? Well, the only way to figure that out is to sit in front of the computer and watch every single day, looking for every single setup. No, I don't want to do that. I want to go straight to the dividends. When are they paying their dividend? Because just before the dividend is paid, the stock has a tendency to increase in value. If I know when the stock goes up in value, it gives me the opportunity to get into a simple, safe trading scenario that makes me a consistent 1% per week. Okay. Okay, we already looked at that one. Too much taxes. Ben said, I have no idea what that means. Spice Bomb, I just joined. Would you share some of a good weekly dividend stock options, please, so I can catch up? Well, what do we got? We're waiting for that one to refill. Some good ones, huh? Let's come up with some good ones. All right, you ready for some good ones? Mandalese, US Bank, American Express, Bristol Myers Squibb, Verizon, MasterCard, AbbVie, Globe Life. That's Warren Buffett's list. Where's my list? John Deere, Fifth Third Bank, Nucor, Cardinal Health, Cisco, AT&T, General Mills, Comcast, JP Morgan, Hormel, PNC, Abbott Labs, AbbVie, General Dynamics, so on and so forth. Those are good quality, weekly, optionable dividend stocks. Anthony, you keep asking me that stupid question. I don't know what your issue is. Okay, Joshua, that's wrong. Can you please explain to me, Joshua, what it is I said or did that's wrong? It's a bad indicator in my opinion. Okay, I'm not quite sure what you mean it's a bad indicator in your opinion. I'm a little lost in your conversation. Not a symbol, EBITA. Okay. Look at Gator Oscillator Indicator. Why the hell would I want to do that? Adults have a tendency to make this more complicated than it needs to be. Perfect example. Why would I want to do that? Bro, don't you think that's a lot of work when you could just as easily do this on QQQ and Spider? Okay, Anthony, seriously, dude, are you seriously telling me SPY and QQQ makes over 50% per year? I can't think of a single year where QQQ or SPY made over 50%. I can't. And consistently, I've been doing it for 15 years. I'm not quite sure what it is you're getting at. If you have a good argument, fine. Be more than happy to hear you. But if you don't, why are you doing it? Which one good for a long time? Dracia, I have no idea what you're talking about. I don't do long term. I'm doing a 30-day, my idea 30 days is long term. But RFK coming in, he's going to go after FDA. Yeah, probably. Hammer, YORW. What the heck is YORW? YORW. Portland General Electric. YORW. Why are you giving me a stock symbol that I can't find? YORW. Nothing wrong with US East Coasters. I show up here too. Hey, no nickname, what's happening? Charter, I have no idea. Earnings before interest, taxes, and amortization. Right? What the hell kind of word is that? Are you talking about amortization? That doesn't say that at all. Even better to Las Vegas. Ever been to Las Vegas? Yeah, I was there a couple weeks ago. This is really informative. Thank you, Dina. What's my thoughts on Vanguard? No, they don't have what I'm looking for. EBT. EBT. Okay, so Brolo. EBT. EBT has no options. No. What are your thoughts on dogs of the Dow? I already gave you my opinion on that one. Brolo, EBITA? What the heck is EBITA? That's not a stock symbol, dude. My thoughts on Vanguard. Keith, you got to give me the ticker symbol because I don't do Vanguard because the numbers just don't work. Should I invest in Charter stock? Never heard of them. It's up. Doesn't matter. KGC. What the heck is KGC? KGC. Okay. Kinross. Yuck. Kinross is at 1038. It's a weekly optionable stock, which means I can trade weekly options. But let's see how wonderful they do in paying their dividends. So for that, we go over to Yahoo Finance and put in KGC. KGC. Okay, Kinross. Historical data. Now I like historical data because it allows me to see how many dividends have they paid and how consistently profitable they are. Dividends only. Okay. Okay, so here's a little bit of issue I have with Kinross. Are you ready? 4, 5, 6, 8. Well, that's lovely. But look what happened in 2014. 0. Okay, 2015, nothing. 2016, nothing. 2017, nothing. 2018, nothing. Yeah, no, dude, sorry. Andrea, oh, come on, honey. You should know better. Okay, KGC, look at the dividends. Okay, in 2011, it was 5 cents. 2012, it was 8 cents. Okay, 2013, it was 8 cents. 2014, it was nothing. And then nothing until 2020. Then in 2020, it's 3 cents. 2021, 3 cents. 2023, 3 cents. 2024, 3 cents. It's no increasing for 4 years. No. Mind looking at SoFi? Oh my goodness. You guys over there, SOFI. Okay, can we see this right here? SoFi? There are no dividends in the time period selected. So my question to you, the name of the show is Dividend Stock Talk. The subtitle is Dividend Investing for Weekly Cash Flow. So Morgan, if you invest in SoFi, don't you think you should know whether or not they pay dividends? Well, they don't. So why are you asking me to take a look at it? No dividends, no thank you. Pretty simple. Alex, VTI, seriously? VTI. Go all the way back to the beginning. Okay, here's VTI, all the way down to 2001. Let's take a look at the dividends. 14, 16, 20, 15, that's backwards. 13, that's backwards. 15, 20, 15, backwards. 17, 22, 18, backwards. 19, 39, 22, backwards. 20, backwards. 29, 34, 26, backwards. Seriously, do you guys ever look at the numbers of what you're buying? This is horrible. 2 steps forward, 1 step back, 3 steps forward, 2 steps back. That's not consistently profitable. There's 9,813 different companies you can choose from. Why, Alex, are you picking a company that's not consistently profitable? Okay, up, down, up, down. There's no consistency there whatsoever. You're giving your money to a company that is not consistently profitable. They let me invest in it, but I'm a bot. Okay, wonderful. Ross. The influencers popularized books like Simple Path to Wealth and Your Money, Your Life. Strong push towards stocks like VTI, MSF, and VIL. I get it. Okay, see, they're probably stuffing that crap down your throat because they get heavy commissions on it. Have you ever seen, oh, what's her name? Hold on a second. Susie Orman. Okay, Susie Orman is one of those gurus, those financial advisor gurus, and everybody throws money at it because they think she's wonderful. She actually comes out and admits live that when she was a broker at wherever she was a broker, what, Lehman Hutton or Burns, whatever, she actually sold crap to people because that's what her boss told her to. Yeah, so just because you have someone, a financial advisor, saying, this is great, you need to buy it. VTI, it's a piece of crap. Take a look at the numbers. Numbers don't lie, people do. Don't listen to a damn word I say. Do the research yourself. Go to a financial website, put in VTI. Take a look. How consistently do they increase their dividends? The dividend is a portion of the profits. If the profits increase, the dividends increase. If the dividends do not increase, well, the profits do not increase. They go hand in hand. Okay, if $1 out of every 100 goes to the investors, if that consistently increases, well, logic and common sense says, well, that should increase also. All right. Cleetrover, love it. They don't make them like this anymore. No, they don't. Do you use AI for trading? No. I've seen enough of the Terminator movies. See, I don't trust computers as far as I can throw them. I write shit down. Okay? At some point, you lose electricity, you're going to say, uh-oh, what the fuck? Yeah, not me. I write shit down. I don't trust any of this crap. Giving the worst technical analysis with paper account. Fucking idiot. God damn it. I hate stupid people. I really do. I do. Anthony, seriously, if you can't tell me the difference between the numbers on a paper trading account as opposed to the numbers on a live trading account, okay, let's, for the fun of it, just for the fun of it, AT&T. All right, there it is. Live trading account. Shitload of money in it. Now, that's AT&T. Here's all the numbers for AT&T, right? Okay. Now, let's go to the paper trading account. Let's put in AT&T. Okay. Now, explain to me in a manner in which I will understand. Okay. Here's the chart. Okay. What's the difference? Explain to me the difference. There is no freaking difference. The high of the year is the high of the year. The low of the year is the low of the year. Okay? The option prices are the option prices. If it makes you feel better, I have no problem whatsoever going to this account and showing you the exact same things. But if you want me to take a look at my list, well, my list is not in this account. Okay? Okay, my lists aren't in here. I have no idea what this crap is. So I don't use that account. I use this one because all my shit that I've collected over the last 20 years is right here. So you have a problem with it? Fine. Okay, now explain to me in a manner in which I'll understand, giving the worst technical analysis with a paper account. So Anthony, explain to me, why is it worst account? Why is it the worst information? Here's the high, here's the low, here's where it was, here's where it is. Look at the direction, up, down, up, down. What's the difference? Okay, we'll do the exact same thing. Look, up, down, explain to me the difference. Welcome back to Dojo. Okay, Dakota Kid, how you doing? Thoughts on Vanguard? I don't like Vanguard. Do you use an app or use... No, I don't use AI. Cool stuff by Jake. How you doing, Jake? Hi. Just so you know, when you see this, please know your comments you are seeing is make delayed. Yes, I'm aware of that. Now, the reason why they're delayed is because I have a couple hundred people here. I cannot answer the questions as fast as they come up. Vanguard, BlackRock, Fidelity. Yeah, I get that. What app do you use? That is Thinkorswim. Don't do TSLA. I know exactly what TSLA is. I know what AMD is. Advanced Micro Devices is a no. No dividends, no thank you. It's pretty quick, pretty easy. No dividends, no thank you. All right, I'm tired of this shit. Okay, I haven't blocked somebody in weeks. Anthony's my first block. Okay, here we go. Playing video games, you'd be a way better than thinking you're any good at this. Shit, I love people like you. You know what they say? You don't have enough haters, you're not working hard enough. But thanks, Anthony. That works for me. I can't read that name. I'm going to just call you Jonah. Okay, waste management. We already looked at waste management. Okay, waste management. Here we go. Waste Management is a monthly optionable company, which means I can only trade it once a month. Once a month means only one trade a month, which means I can only get 12 to 24% a year. That doesn't work for me. Weeklies only. Home Depot is a 47-year-old next month. Wait. No. Home Depot, hold on a second. Home Depot was founded in 1978. Well, how the hell can they be a dividend king if they were founded in 1978? Well, they are a dividend king. I don't know why they say they're not. Now, isn't that weird? We're on Google. Right here it says Home Depot was founded in 1978, and here it says 1981. Whatever. Is what it is. It is on my Dividend Kings list. GEVO. G-E-V-O. What the heck is G-E-V-O? G-E-V-O. Okay. GEVO. See, I'm having a difficult time. GEVO. 50 cents back in August. How can that possibly have 20 years of increased dividends? It boggles my mind. Okay? Arshad Mahmoud. When I say 20 years of increased dividends, GEVO can't possibly. Oh, let's check it out. Oh, I don't want that. I don't want that. I want this right here. GEVO. Okay, sorry, dude. GEVO has no dividends. So that's going to be a no. Okay, Brolo. Owl. O-W-L. O-W-L. Okay, so I have a minor issue with Owl, okay? 2021, 22, 23, 24. It's only 4 years old. How do you get 20 years of increased dividends on a 4-year-old company? T-O-K-L-O. O-K-L-O. No dividends, no thank you. Okay, Keith, you got to give me the ticker symbol for Vanguard. Thoughts on Altria? Andrew, I like Altria. I actually own some Altria. M-O, Altria. Okay? Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down. Here we are currently right now, 51.65. The 52s are going for 29 to 36. That's not 1%. Now, as much as I like Altria, I even own some Altria. It's going to be a no for this week. Okay, I'm looking for 1%. 1% of a $51 stock is 52 cents. Polar Ball, this is outdated. I have no idea why you say this is outdated. Thoughts Twin was cooking in FL. Thought Twin was cooking in FL. I have no idea what that means. Alex, check out MPC. MPC. Okay. Marathon Pete Corporation. Okay. The high, the low, where was it, where is it? What's the movement? Up, down, up. We're currently at 140, should be at 143. The 143 is at 210. Well, that's well over 1%. Let's see what it looks like. Okay, a year ago, we're at 156.42. Okay, we topped out in the beginning of April at 220. Okay, the last 90 days. This is the last 90 days. I'm looking at the exact same thing. Where's the high? Where's the low? Where was it 90 days ago? Where is it now? What's the movement? Down, up, down, up. Well, what's happening here? Okay, this is kind of important. What's going on now? All right, so let's take a look at the 30 days. Here's the last 30 days. 30 days ago was the 30-day high. She dropped, now she's shooting back up. But look at where she is. Okay, 2 weeks ago we're at 130. Now she jumps up to 148. That's an $18 increase. An $18 increase on a $130 stock, well, that's over 12%. If you buy something and it goes up 12%, all right, I would take profits. That's me. If you want to continue holding, hey, that's up to you. But don't be surprised if at 12% increase within 2 weeks, it starts going back down again because people are taking profits. That's why we're here, to earn profits. So if you hear 30-day high, she makes a big drop. She goes from 154 down to 130. That's a $24 drop. Okay, on a $150 stock, $24 is 1/6. 1/6 is, I don't know off the top of my head, but it's a nice fat drop. She retraces over 12%. Now it's going to be profit taking. She should hypothetically come down. Should. Doesn't mean it's going to. Now, Polar, wait a minute. Polar Ice Ball. This outdated, I have no idea what you mean by it. So outdated. I have no clue what you mean by it's outdated. Enjoy. Thank you, sir. Very informative. You're welcome. Polar Ice Ball. ASKS. What the heck is that? ASKS. That's not even a stock, dude. I don't even know why. I don't even know why you're doing that. Okay. I'm going to ask them the same question. Thoughts on Vanguard. Keith, I asked you 3 times. Give me the ticker symbol for Vanguard. Okay? Wow, you guys got a lot of questions. Enjoy. Let's talk about something new other than earning money. How about no? This is what I'm here for. Who cares if it's a paper trading account? Thanks for the info. You awesome. Thank you, Seraph Cheese. Don't. Where are you? Canada? I'm in St. Petersburg. Intel already to the upside. Ooh, I like Intel. I actually have some Intel. INTC. Intel. Okay, here we go. Intel, here's the high of the year, here's the low of the year, here's where it was, here's where it is. Look what it's doing. Down, sideways, down, sideways, down, sideways. We're at 1988. I can buy it tomorrow at 1984. Now, 1984 is a couple of questions you need to ask yourself. Number one, do I like Intel? Do I like Intel at this price? Can I picture myself buying and owning and holding on to Intel until it hits the target that I'm looking for? Well, what am I looking for? I'm looking to get a 1%. What is 1% of 1984? Well, that's 20 cents. It's not a lot. Okay, so currently, if I buy it here, 1984, and I sell somebody the rights to buy it from me through what is called a covered call, the 20 is going for 55 cents. So for the fun of it, let's do a practice trade and see if it makes sense. Now, Twinkle Toes thinks a paper trading account doesn't make sense, so let's go to one of the other ones. Okay? It's still the same company. What one was it? I forgot already. Intel. Okay, trade. INTC. There we go. Okay, same thing. Okay, INTC, 1984. The numbers are the exact same. It doesn't really matter whether it's a paper trading account or a real account. Well, this is a real account. The numbers aren't any different. Okay, here we are. Let me just do this right here so we can look at it all. Okay, that way we can see it better. All right, so the last 30 days is what I want to see, because is it the right time to buy? Okay, 30 days ago, here we are. She shoots up, pulls back, shoots up, pulls back. Let's see what the numbers look like. Even though it's not that glamorous at this moment because she is in a downward turn. Today was an up day. Well, let's see what happens. Let's get rid of that. Let's go to here. A covered call, 1984. The closest one is going to be the 20. There it is right there. Okay, now I want to look at one contract. I'm just going to show you one contract. If I show you 10, 20, 30 contracts, the numbers might scare you. So one contract at the market first thing in the morning, this is what usually happens. Confirm and send. Buy one covered call of Intel, INTC 100. Those are the weeklies. What does that mean? 10 January 24. I don't want that one. That's no. See, this is why I tell people read it out loud to hear what it says. I don't want January 10. I get rid of that one because there's only 1 day left there. I want this one right here. A big difference between 10 January and 17 January. 10 January is this Friday, which means there's only 1 day left. I'm not going to get 1% for 1 day. But next Friday, the 17th, okay, the 17th of January, one contract, change the numbers right there. Market order. Why do I do a market order as opposed to a limit order? Now, some of you might say, well, limit order, you get to choose your price. Yeah, you do. Do I honestly care about my price? No, I really don't. And here's the reason why. Okay, let me explain it to you. A market order will be filled instantaneously first thing in the morning. Also, secondly, doing a market order, and when I first get in, I am buying the stock and selling the option at the exact same time. The profit is already in. So the stock and the option are married together in this particular trade. Buying the stock, selling the option at the exact same time. I do it at the market because it's filled instantaneously first thing in the morning. That's why I do it. Could I do a limit order? Yes, I could. But the limit order will sit on the market maker's screen on his computer, and he will fill it when he is ready to fill it. Okay, so I could miss an opportunity. Me personally, I don't suggest you do this. I suggest you all figure out what works best for you. For me, I buy it at the market, at the open, every time I buy. But that's me. You got to figure out what works for you. I value my time more than I value the amount of money I make. Because money comes and goes. What I could never, ever get back is my time. I don't want to sit in front of the computer. That's why when you hear every single video from me, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. It means I only want to sit in front of my computer for 10 minutes a day. That's it. Okay? I could sit in front of my computer and make more money, but that's not what I'm looking for. I'm 60 years old. I'm retired. I value my time more than the money I bring in. Now, I've been doing this for over 20 years. Okay, the first 5 years, I admit, were not that great. It wasn't until 2008 when my 9-year-old daughter says, Daddy, can you teach me what you're doing? It looks like fun. So the trading strategy, simple, safe, predictable, consistent, and no way that she can lose. Okay, 5 rules. Rule number 1, never buy something you don't understand. If you don't understand it, if you don't know everything about it, then you shouldn't be buying it. Rule number 2, never sell at a loss. It doesn't make sense to buy something and sell it for less than what you paid for it. Doesn't make sense. Because if you paid attention to rule number 1, you'll know everything you need to know about the company. Okay, there's a high of the year, there's a low of the year. The company stock price will go between the high and the low, and it'll go back and forth, back and forth, back and forth. If you don't understand it, don't play the game. Rule number 3, make sure the company is consistently profitable. Okay? Why people put money into entities that are not consistently profitable? Yeah, that's trading one wishing and praying. More power to you. Me? There's 9,813 different companies I can choose any day of the week. Why would I? You can do whatever you want. But why would I want to put my money into a company that's not consistently profitable? It doesn't make any sense. There's 9,813 stocks. Don't listen to a word I say. Do your own research. Figure out, does it make sense? There's a couple of questions you should be asking yourself. And question number 1 should be, does it make sense? Question number 2 should be, do I like this particular company? Well, this particular company here is Intel. Hey, I grew up in the 60s, 70s, and 80s. I know who Intel is. I know what they do. Okay, I've been trading Intel for the past few years. It works out very nicely for me. So let's go back to this trade. Rule number 4, weekly options only. When I say I'm retired, I want a consistent, safe, and predictable 1% per week. The only way to get that is through weekly options or sitting in front of your computer all day long. Yeah, no thank you. Okay. Where are you? Canada, US? I'm in St. Petersburg. I already said that. I have no idea how to pronounce that name, but okay. We're looking at Intel at the moment. Now, this is the order. Let me read it to you again. Buy one covered call Intel 100s. Those are the weeklies. 17 January 25. Well, that means it's going to expire next Friday. The $20 call against the Intel at the market to open. That's the order. If you say that to your broker, that's what he will fill for you. Okay, so let's look at a little deeper at the numbers. Okay, my break even is 19.27. See that price right there? 19.27. So if on the 17th, right here, see 17th of January, next Friday, 3:59 p.m., if the stock is above $20, okay, I will get all my money back next following Monday, and I get to keep the profit. If it is below $20, $19.99, well, then I keep the money, and I keep the stock, and I get to do it again. So I can continue to do it every single week until it hits my target. In this situation, we're talking about my target being 20 bucks. Break even, 19.27. Well, the current stock price is 19.84. Okay, does it make sense? That's question number one. Okay, so here, next line down, maximum profit. Now remember when I said I want simple, safe, predictable. Most people just buy a stock and wait for it to go up or hope for it goes up. No, no, no. This here, I know what my profit's going to be before I even do it. So if I'm not making my 1%, I'm not going to do it. It's actually that simple. So if I buy it at the current price, 19.84, and I sell somebody the rights to buy it from me at 20, I could do the 1950s because that's profitable also. But I can collect $72.50 per share. Now, let's get the calculator out so show you how to calculate this. Okay, get rid of that. Now, the maximum profit for one contract, $72.50. So we're going to take the $72.50 into the calculator, $72.50. All right. Now, to figure out my rate of return for the week, remember it's the week because it expires on the 17th. Okay. I take the profit, $72.50. Okay, right there, see it, $72.50. Okay, and I divide it by the cost of the trade plus the commission. Right here, see it? Right there. Cost of the trade, including commission and fees, $1,928. So I'm going to divide it by 1,928. That will give me a rate of return for 1 week. 1 week. 3.76%. That's 3.75% for 1 week. Now, do you have any idea what 3% a week is? 3% a week is 150% return for the year at 3% a week. Can you get 3% every week? Maybe, maybe not. Do I? No, I average around 1%. Okay, last year it was a little over 1%. Okay, so that's if it is an all cash account. That's the number if it is all cash. This number here, 539, that is if it is a margin account. Now, I always tell people, do not do a margin account until you understand the risks involved. Keith, Nashville, I asked the question 12 times. Yes, you did. And I gave you an answer 12 times. You just didn't like the answer. Terribly sorry. You want to ask the question again? If it's a no, you will get no for the 13th time. Okay, let me finish up with Intel. All right, so if it is going to be a margin account, it's basically going to be almost the exact same. because the profit doesn't change. The profit is still 72.50. 72.50. But what does change is how much is it going to cost me? Well, on margin, it's only $539. Okay, divided by $539. And that would give me a rate of return for the week of 13.4%. Does it happen all the time like this? No, hardly ever. But every once in a while, you'll get a ridiculous number like this. Okay, I got a bunch of that on Harley Davidson this year, or last year, and recently U.S. Steel. Okay, Joha wants to take a look at Verizon, VZ. Okay, now Keith, I find that rather amusing. Okay, you said you asked the question 12 times. And I said, fine, ask it again, and that will be 13 times. And here's the funny thing. The 13th answer to the exact same question is going to be the exact same. My thoughts on Vanguard. Tell me the ticker symbol for Vanguard, and then I can tell you no. If it's not consistently profitable, it's going to be a no. Simple. Okay, we'll take a look at Verizon. Okay, let's get out of here. Nope. Exit. Delete. Cover stock. Back to the beginning. Back to over here. And we're back to where we started from. Okay. Eric, General Mills. General Mills is a monthly. That's going to be a no. Okay, monthly, the numbers just don't work. Verizon, VZ. VZ. Okay, I'm going to say no to Verizon this week. Okay. What's your name? Jehovah. Okay, take a good look at Verizon. Okay, back in the end of November, we're way up here. Look at where we are now. Okay, this thing is still dropping. Now, don't get me wrong, I like Verizon, I really do. However, until it finds the bottom, okay, I'm just going to keep watching it. Once it finds the bottom, turns around, goes back up, then I will take a look at it. I will take a look at the numbers. What am I buying it for? What strike price am I selling? What premium am I collecting? And is that 1% or more? It's all about the numbers. Does it make sense? Well, number one, question is, do I like the company? Number two, do I like the company at this price? Number three, am I willing to hold on to it long enough for it to hit my target and consistently bring up a 1% weekly cash flow? Okay, Alec, you want to take a look at Caterpillar? Love Caterpillar, I do. Caterpillar fits nicely into this strategy. Okay, here we go. Caterpillar, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, sideways, up, down, sideways, 360.99. So I'll be looking at the 360s. $5.10 a share. That is well over 1%. So the question you ask yourself, do I like Caterpillar? Well, great. Let's take a better look at the numbers. This is just the 1 year chart. I look for 5 things. The high, the low, where was it, where is it, and the direction. Not that difficult. Now, once I figure that out, I check out the numbers. It's over 1%. Great. Now let's take a better look. A year ago, we have the bottom here on the 17th of January, 275. Look at the last 90 days. This is the last 90 days. Here's the high, here's the low. It's where it was, where it is. Look at this. Down, up, sideways. This is where we are now. Okay, it's going to be a no this week. All right, because she's dropping right here, 3 down days in a row. As soon as she finds the bottom, okay, turns around, goes back up. I like Caterpillar, I do. It is on my list. As soon as she turns around, because it will find a bottom eventually. They always do. They go up, they go down. They go down until they're done going down. Once they're done, they turn around and go back up again. Show me one company that hasn't done the same thing. They're all the exact same. Stocks go up, stocks go down. That's all they do. Clee Torres. Feisty, I like that one. Oh my God, really? My thoughts on Vanguard is no. And I don't know why you keep asking me the same question. Why are options important to have for your purchased shares? That's a good question. Okay, now, People invest for certain reasons. Me, I'm investing for cash flow. If you have another way other than me sitting in front of the computer all day long to gain 1% every single week in 10 minutes or less a day, that's less than an hour. Less than an hour a week to make 1%. Now, hypothetically speaking, okay, here's my accounts right here. I share 3 of them with you. I got 7, but I only share 3 of them. Okay, account number 1. Okay, last year I made 95%. Don't pay attention to that. But here's the current balance, $188,000. So what is 1% of $188,000? Well, that's $1,800. That's almost $1,900 a week. Now, if I'm doing 10 or 15 minutes a day, that's about an hour a week. So an hour a week to make $1,800 from this one account right here, why the hell not? Look at account number 2, $190,000. Well, $190,000, 1% is $1,900. 1 hour a week, that's $1,900 for 1 hour. Now, you may not be at that level. Now, I started back in the late 80s, back in the 90s. I started out with $12,000. And here we are today. So it is what it is. 1% per week is what I'm looking for. Okay, Adam, I don't do cryptocurrency, so I'm just going to ignore that. So, Sigma Enigma. The reason why I want, oh, check at that, one of those thingies. Why are options important to have a purchased share? Why is it important? Because it allows me a simple, safe, predictable trade every single week. Okay, if you know of a trading strategy that takes less than 2 or 3 minutes to jump into and can simply, safely, and predictably every single week make 1% or more, I'll be more than happy to take a look at it. That has little to no risk. Okay, when you buy a stock, you own it. You own it for the rest of your life. Options, yeah, they expire. So the simplest and easy trading strategy is buying a stock and holding on to it. Well, that doesn't guarantee me a weekly cash flow, so that doesn't work. So the next trading strategy that is simple and predictable, that is the covered call. You buy a stock, you sell somebody the rights to buy it from you, they pay you a premium, that premium is 1% or more. So holding long term is fool's gold. Okay, 3-day trade. Okay, take a look here at Intel. Do you see where it was a year ago? 50. Do you see where it is now? 19. Explain to me in a manner why holding long term is a good idea. Okay, it was 50 last year. Now it's at 20. Why is that a good idea to buy and hold long term? Okay, now 52 weeks. Okay, so if I buy it and every week I do a covered call, get 1%, that's 52 weeks. That's 50% return on my money. But here's the thing. 52 weeks. Well, there's over 300 companies that are consistently profitable. So I can do this every single week. See my come on, right here. Okay, here's my list of stocks. Okay, this is just one of my lists. Okay, John Deere, Fifth Third Bank, J.P. Morgan, Hormel, Caterpillar. See, Caterpillar's on my list. Clorox, Lowe's, Pfizer, General Dynamics, blah, 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 all those other ones. That's just one list. And then I have another list here. Okay, AGNC, Humana, Annaly, Nucor, Oracle, AGNC, Apache. Okay, I have a bunch to look at. It's about 300 companies that I look at on a consistent basis. But I only do it 1 week at a time. So for the first week of January, these are the only ones I'm looking at. I'm not looking at anything else because these don't matter to me at this moment in time. Because if you take a stock, look at Lowe's, okay, it pays a dividend on the 22nd. Now, if it pays a dividend on the 22nd, and if this dividend stock increases in value just before the dividend date, which is right here, I want to buy it 2 weeks before on a Monday. Now, the reason why I do it on Monday, because between Monday and Friday is the maximum amount of time value for a weekly optionable stock. Monday morning, first thing when the market opens. Friday afternoon, just before the market closes. That is the maximum amount of time you are going to get on a weekly option. So yeah, I want to open up first thing in the morning at the market price, buy my stock, sell my option, and then see what happens during the week. And on Friday, just before the market closes, I want to take a look at where's my position, what should I do now. Okay, so let's keep on going. All right, I'm not going to look at any more stocks because it's almost 2 o'clock. I've been here since 9. Got it? Way to go. I appreciate your insight. I'm learning a lot. Okay, Keith, but did you learn that I need a ticker symbol in order to be able to look at the stock? Okay, Toll Brothers. Now, I do have an account that has Toll Brothers in it, but I'm not going to look at it anymore because I promised I will look at and answer every single question. So I'm not going to look at stocks anymore. I'm just going to answer the questions. Toll Brothers is on my list. Sarah stock, never heard of it. Cell therapy for type 1 diabetes. Okay, Luckiest. Don't take this the wrong way. I really honestly don't care what the company does. Seriously, I don't. Are they consistently profitable? What does that mean? The people in charge of the company, are they running the company properly? Are they consistently profitable? It's a simple question. Are they consistently profitable for a minimum of 20 years, 2 decades? 20 years. There's 9,813 companies. What is so great about Sarah stock that I should negate all my rules just to buy that one? Especially if it's not consistently profitable. I'm very picky where I put my money. SoFi, Kane, you weren't listening. SoFi has no dividends. That's a no. TOKLO, you weren't listening either. Has no dividends. No thank you. MSTR, same thing. No dividends. No thank you. He reminds me of my mean high school math teacher that would just yell at me when I didn't get it. Okay, Clee, I got no problem whatsoever explaining to you in a simple manner. You got to ask me a simple question. But when you ask me the same questions over and over and over again and you don't pay attention, what did you expect me to do? Okay, I'm Gen X. You're worried about getting your feelings hurt? You shouldn't be here. I honestly don't care about your feelings. Really, I don't. Okay? If it ain't broke, don't fix it. It worked before you touched it. Okay? If it works, don't mess with it. Okay? If the company is profitable, great, we'll look at it. If it has weekly options, great, we'll look at it. It's simple, easy rules. I don't yell at people until they ask me stupid shit or they don't listen. It's very simple. Okay? 20 years of increased profits and weekly options. That's the only criteria I have. Okay, Alex, eyes on Sava? No, they're not 20 years old. IIPR, same thing. Not 20 years old, not 20 years of increased profits. TR, AbbVie, love AbbVie. I do. I asked Vanguard thinking it wasn't working. Sorry for asking so much. Look, you can ask one question. Ask the same question over and over and over again. You're not going to get a different answer. WiMAX. User 81020031825777. Why couldn't your parents just name you Peter or Tom? Okay, WiMAX. No dividends, no thank you. User 810200, same dude, okay? Bitto, really? When I say 20 years of consistent profits and you throw Bitto at me, Sava, same thing. No, we can't see it. Okay, Martin, I have no idea what you mean by you can't see it. If I pull up Sava, S-A-V-A, okay? Okay, here's Sava right here. Hey, Cassava Sciences. Okay, it was a year ago at 25. It jumped all the way up to 40. Now it's at $2.83. Okay, it might be a bargain. Okay, so let's go to Yahoo Finance and put this thing into, and take a look into the data stream. Okay, third trade day. You got to give me the ticker symbol. Okay, Bank of Hawaii means nothing to me. Specifically, it means nothing to me, so it's probably going to be a no. Because I know almost every company that has 20 years of increased dividends. Sava, S-A-V-A. Okay, so explain to me in a manner, Alex, why you think two dividends, 2010 and 2012, constitutes 20 years of increased dividends. 20 years of increased dividends, not 2, 20. BOH. BOH is the Bank of Hawaii. Okay. BOH. (19, 18, 17, 16, 15, 14, 13, 12, 11, 10). Oh, look at this. Nice. All right, so one minor issue. Okay, just one minor issue with Bank of Hawaii. You ready? 18, 2000, 18. 2001, 18. 2002, 18. That's 3 years with no increases. That means they're not consistently profitable the first 3 years. Well, let's keep on going. Okay, 2003, 19, 30, nice, 33, 37, 41, 44, 45. Wait a second, 45, 2009. 2010, 45, 2011, 45, 2012, 45, 2013, 45, 2014, 45, 2015, 45. What is that, 6 years, no increases? 6 years, no increases. Explain to me why you think 6 years with no increases constitutes 20 years of increased profitability. Well, the 6 years with no profits, or no increased profits. 16, 48, 50, 52, 60, 62, 65, 67, 19, 67, 20, 67, 21, 67. That's 3 years, no increase. 21, 70, 22, 70, 23, 70, 24, 70. Again, 3 years, no increases. 3 years, no increases. It's not consistently profitable. Again, I'm going to repeat myself. If the company doesn't have 20 years of consecutively increased dividends, here we go. You ready? Dividend Kings. 54 companies that have consistently increased their dividends for 5 decades. That's 50 years. Dividend Aristocrats. 66 companies that have consistently increased their dividends for 25 consecutive years. Dividend Champions. 150 companies that have consistently increased their dividends for more than 25 years. Dividend Contenders. 300 companies that have consistently increased their dividends for 10 years to 24 years. It's not that difficult. Those 4 lists I just gave you will give you 300 different companies that are consistently profitable. WiMAX, no. Bitto, no. Saba, no. Hawaiian Bank, no. What about Fortis? No. Team, no. KNG, no. VGT, no. Pedro, ¿qué pasa? AMDY and AMD, no. Wait a minute. No. ADM, yes. AMD, no. QMCO, oh my goodness. You guys are going to make it so easy not to do the West Coast. What's my opinion on JEPQ? My opinion, Tristan, what the hell are you thinking, dude? Seriously, did you check the numbers for JEPQ? JEPQ. Are you ready? JEPQ, here's the dividends. How well and wonderful do they pay? Well, number one, JEPQ has only been around since 2022. That's 2 years, dude. Just 2. Most companies don't make it past 3 to 5 years. JEPQ has been around for 2 years. The very first dividend, June 1st, 2022. 38, 34, backwards. 41, 55, 38, backwards. 68, 55, backwards. 58, 44, backwards. 43, backwards. 45, 48, 36, backwards. 37, 45, 42, backwards. 42, 34, backwards. 38, 43, 45, 42, backwards. 56, 55, backwards. 49, backwards. 51, 46. What part of... Oh, fuck no. I'm not even going to freaking bother anymore. VOO, fucking Gabe, seriously, VOO is another piece of trash. MSTR, same thing. You love them, don't lie. Hell no, I don't. Silent Gaming, hello, this is neat, and thank you for this. Please give me your thoughts on KNG. Oh, wow. KNG. Okay. First of all, KNG. First dividend they paid out was 2018. Explain to me what you guys on the West Coast, how the hell you count. Because where I count 20 years from today is 2004. Why is it you think KNG 20 years ago is 2018? My math says that's 7 years. That's not 20, dude. But let's take a look at the numbers anyway. 41, 46, 45, backwards. 46, 47, 48, 49, 39, backwards. 43, 44, 46, 48, 50, 49, backwards. 52, 50, backwards. 51, 56, 48, backwards. 36, 37, 37, 38, 30, 37, 38, 37, backwards. 38, 39, 38, blah, 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 backwards. Seriously? Number one, it's not 20 years. Number two, 2 steps forward, 1 step back. 2 steps forward, 1 step back. I have no idea what they're teaching you over on the West Coast. Okay, number one, KNG is not 20 years. VTI, hell no. QQQ, hell no. I'm going to do the exact same thing. I'm going to look at the numbers. You're going to see it go up. You're going to see it go down. You're going to see up, up, down, up, down. Not consistently increasing. Silent Gaming, hello. This is neat. Okay, thank you. KNG, no. One more option. OKE, really? Seriously? I think you guys do it just to piss me off. Okay, OKG. OKE. $2009. Here we go. From 2000, it goes from 7. 2000. 7, 2001, 7, 2002, 7, 2003, 7. 4 years, no increased profits. Why am I looking at this? I'm in the red in my McDonald's stock. Roxy, how are you doing today? Okay, what's your top 3 for 2025 safe returns? Wow, so sensitive. I'm not sensitive. I'm just pissed off by stupid people. Technical analysis not working. Not quite sure what you mean by it's not working. It's either going up or it's going down. There's nothing technical about that whatsoever. Correct me if this is wrong. You look at stocks with rising dividends and write covered calls 2 weeks before the dividend announcement. How do you come up with the 1%? All right, Mr. Q Mason. Let me see if I can explain this to you in a manner which you'll understand. I'm kind of hoping somebody over on that West Coast has, some kind of brains. There's got to be somebody. Okay, are you ready, Mr. Mason? I can't do Macy's because that's not quite right. Ford, no. General Motors, no. Intel, INTC. How about U.S. Steel? All right, let's look at U.S. Steel. All right. Okay, Mr. Mason, we're going to take a look at U.S. Steel. All right. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at it. It goes down. Now it's going back up again. It's at $32.99 at this moment in time. U.S. Steel has been in business for over 100 years. It was originally created by Dale Carnegie. Now it's up for sale. They haven't quite figured out whether or not they're going to sell it. But here's the bit. It's at $32.99. Okay? Argue all you want. That's the current price, $32.99. Now, the closest strike price is $33. Okay? $33 is the strike price. If I do a covered call on U.S. Steel, let's actually do one and I'll walk you through it and you see if it makes sense. Okay, so we're all in agreement. The current price is $32.99. See, here's the stock price, blah, blah, blah. There it is. Okay, let's get this out of the way. Let's go down here to covered call. Now, when I say the 33s, I want to buy a covered call at 33 because the stock at this moment in time is $32.99. So, one contract, which means I'm going to buy 100 shares of U.S. Steel at the current market price. I'm also going to sell somebody the right, not the obligation, through a covered call to buy it from me at the exact same price I just bought it for. Okay, at this moment in time, here's the trade right here. Buy one covered call of X, U.S. Steel, 100. Those are the weeklies. 17 January 25. That is next Friday. Not this Friday, next Friday. So, the $33 call strike against the X, which is U.S. Steel, at the market to open. That's the order. The break even is $31.75. Well, the current price is $32.99. Break even, $31.75. So as long as the stock stays above $31.75, I'm going to have some type of a profit. However, I'm looking for the stock to be $30 or more come next Friday. That being said, I'm going to profit $125 per contract. What is one contract? One contract equals 100 shares. So, what's 100 shares going to cost me? Well, that's right here. The cost of the trade, including commission and fees. Okay? $3,175. How do I calculate my rate of return? Simple. Number one, get out my calculator. Number two, put in the profit. The maximum profit per contract is $125. Okay? Right there. Maximum profit. Let me move it over here so you guys can read it. Okay? Maximum profit right there, $125. When I say I want a simple, safe, predictable, I know what I'm making before I even do it. I'm not buying the stock hoping it goes up. Okay? I already know what I'm going to make. $125 per contract. One contract, $125. Two contracts, $250. Three contracts, you figure it out. Okay? Simple. Now, to figure out my rate of return, the $125, the profit, divided by what it cost me to do the trade. Cost of the trade, including commissions. $3,175, and for those of you that are really picky, 65 cents. That's going to equal 3.93%. You ask, how do I get 1%? Well, I find trades like this. U.S. Steel. I ask myself a question. Do I like U.S. Steel? Do I like U.S. Steel at this current price? The first question I ask is, does it make sense? Well, if I buy U.S. Steel at the current price, $32.99, sell it to somebody else at the exact same price I just paid for it, the 33 call strike. Granted, it's not the exact same price, but $32.99 and 33, well, that's pretty damn close. Okay? if I sell them the rights to buy it from me through what is called a covered call, one of the safest trading strategies there is, simple, safe, predictable, consistent, 1% per week is what I'm looking for. It just so happens this is giving me 3.9. That's if it's all cash. If it's an all cash account, which is I tell all beginners, make sure you use an all cash account. You do not want to do margin until you understand the risks. But just for you, Mr. Mason, I'm going to show you what does it look like on a margin account. The profit's still the exact same, 125. But here's the difference. In a margin account, okay, right down here, buying power effect, 1,535. Well, margin account, I'm using $1,500 of my money and $1,500 of my broker's money, and they're lending that to me. Now, they're not lending to me at the kindness of your heart. I do have to pay 8 to 10% per year for the privilege of borrowing that money. But if I'm making 50 to 60 to 70% every year, I don't mind paying 8 to 10%. I don't. So, if I divide it by the margin, which is 1,535, that comes to a grand total of 8.14%. Okay, math doesn't lie. The numbers are what the numbers are. But it always, always, always comes back to the top 5 questions. Question number 1, does it make sense? Question number 2, do I like this company? Question number 3, do I like this company at this price? Question number 4, am I willing to hold on to this for as long as I need to for it to hit my target? Okay, and question number 5, am I okay if it drops? Okay. All right, let's get out of here. So, Mr. Mason, hope that answers your question. Mason, I'm East Coast, Connecticut. That's probably why you get it. It only a couple of stocks that offer increased dividends and they are over $100. That's not true. Okay, if you are small, followed. I got 1% on Polygon. Okay, I got 1% on XDC. Okay, stocks is not like it used to be. Okay. Wow, so sensitive. Yeah, I hate stupid people. Aiden, can I recommend blue light glasses? Your eyes seem very strained. Yeah, well, I got stuck with a nail in this eye, so I don't see out of that eye, so I only have one. Brilliant explanation. Alrighty, glad you like it. Realty income. Realty income? You mean O? Oh, realty? Yeah, no. Walmart is amazing. Keep winning. Okay. Let's get out of there. Let's get out of there. Let's go back to here. Let's go back to here. Okay, now I'm not doing any more stocks. I'm just going to finish up with the questions. What's a good resource to learn about dividend stocks and weekly options? YouTube. Okay, Roxy, Walmart. Yeah, Walmart's on my list. It's a great company. What's a good resource? Okay, we already answered that question. Best REIT. I don't know off the top of my head. Andrew. Okay. What's a good resource? You already asked that question. Silent gaming. Anyone? What's a good resource to learn about dividend stocks? YouTube. What's a good... Dude, you gotta ask the question once. That's it. Okay. Hormel. Ooh, Dividend King. What's a good... Is he reading the comments? Silent gaming. Yes, I am. And I tell you, there's over a couple of hundred people here. You're not the only one asking questions. I answer each and every individual question one at a time. It's only 2 companies, Amazon and McDonald's. Amazon's a no. No dividends, no thank you. McDonald's, we'll look at it tomorrow. Okay? I've been doing this since 9 o'clock this evening. So I'm going on, what, 5.5 hours? Cut me a break. I'm ready to go to bed. I'm just answering your questions. When do companies announce dividends? They're all different. Every company has their own way of doing things. They have there's a difference between a physical year and a fiscal year. I don't know the difference. Okay, for us, it's January 1st to December 31st. For companies, it's the time in which they incorporated. Okay, they're all different. Okay, now silent gaming, I'm going to tell you for the 4th time. A good resource is YouTube. Have a question? Go to YouTube. You like CSL? Nathan, no, I wouldn't. CSL. See, I love it when people say that. I like CSL. No, I won't. Monthly optional stock? No, doesn't work. No, thank you. Okay. Magambo, oh, realty, double hell no. Dakota Kid, to what extent do you think that the preferred Marshall, oh my goodness. All right, I'm reading these questions as they come along. Okay, here we go. BNP, yeah, no. Can you start from the beginning? I'm confused. Terribly sorry, dude. Everything, here's the thing. Torres, see? Okay. What I'm explaining right here, right now, and this screen right here is live on YouTube, and it is being recorded. Okay? So, there's over 700 videos exactly like this that I have done all last year. Okay? If you're confused, go to YouTube, take one at a time, and just go slowly. It's not that difficult. Now, it bothers me. It really bothers me to know that you people are the future of this country. This trading strategy was created for a 9-year-old. Let me quickly show you the 9-year-old. YouTube, give me a second, I gotta pull it up. This is my YouTube channel. Okay, videos, that 10-minute trader. Okay, the oldest videos.
Website called Thingy, which my dad did let me call him. Hi, I'm Tracy, and you being part of my internet website called Thingy, which my dad did let me calling it that, but I do. Being part of that, you're going to be getting weekly.
That's me, 15 years ago.
What does that mean? That means every single day you can buy a different stock. Every single day there is a different company paying out dividends.
That part always makes me laugh. I'm just a little unhappy with the audience out there because apparently you guys aren't listening. Okay, yeah, that's me 15 years ago. That's my daughter when she was 11. Now, I taught her when she was 9. She said, Daddy, can you teach me how to do this? 9 years old. It had to be simple, safe, predictable, consistent, and no way for her to lose. It boggles my mind that you people out in California on the West Coast, you can't grasp this. If the company's consistently profitable, great, 20 years. I bet your daughter's a master at it now. No, she's not. At age 13, okay, she wanted nothing to do with me. I am the evil ATM, okay? From age 2 to age 12, she was my shadow. We did everything together. At 13, yeah, I am the devil ATM machine. Daddy, can I have this? No. Daddy, can I have that? No. You make your own money. You do it yourself. Sorry, I'm Gen X. You want something? You work for it. I don't give my kids anything unless they work for it and they earn it. So she was 9 years old. It was created for her. If you have a hard time with it, I fear for the future of our country. It's not that difficult. Okay, BNP, all right? Not on my list, terribly sorry. It's B. Gabby. It's BG baby. Okay, VOO, hell no. Okay, what that tells me is you don't actually look at the numbers of what it is you're buying. OI, yeah, no. How about no? Yeah, it works too. How much do you need to start with covered calls? Well, Keith, here's the thing. Okay, I started with 12,000. My grandson started with $50. Okay, me, grandma, the other in-laws, and my children. You know, my son and my daughter-in-law. We take all our change and we throw it into account for my grandson. Granted, it's only $5 or $10 a week, but he's 4 years old. So at some point, he'll be doing just fine. What's your CRO prediction? Okay, you have to explain to me what CRO means. I've done a lot of things in my life, and acronyms are a whole bunch of different ways. Since March, I'm way up more on my AMDY than my AMD. Oh, good for you. I don't do AMD because no dividends, no thank you. What do you think about Intel? I like Intel. They have entered the graphics card market very strongly and hide the profits in new factories. Well, okay, here's the idea. Here's the thing. Okay, if you like Intel, you got to ask yourself a couple of questions. Are they consistently profitable? It's a yes or no question. Do they have what it is you're looking for? Okay, that's a question only you can answer. Is it something you want to buy and you want to hold on to? Only you can answer that question. Me, I like Intel. Yes, I have some Intel. I buy it, I sell it. I don't hold on to anything. Okay, I buy it, they have every 90 days, they have a dividend. So just before the dividend, I buy it, it goes up, I get my profit, I get out, and I wait for 90 days for it to happen again. How do you know when it's the bottom? Eduardo, how do you know it's the bottom? Eduardo, let me ask you a question. Eduardo, how do you know this is the bottom? That's a question. How do you know that's the bottom? Well, it was here, now it's here. Okay? Okay, I can get you a third grader, a second grader, a fourth grader, or my 4-year-old grandson and saying, hey, little buddy, where's the bottom? It's right there. Buddy, where's the top? It's right there. It's actually that easy. Adults have a tendency to make this more complicated than it needs to be. It's not that complicated. Where's the top? It's right there. Where's the bottom? It's right there. What direction is it going? You take your little finger and go like this. Up, down, up, down, up. It's really not that difficult. Why adults have a tendency to make things more complicated is beyond me. TLT. Okay, I'm not looking at anything anymore because I'm done for the night. We're at 2:30. Yeah. Okay, JEPQ and JEPI, you aren't listening to me. Okay, TikTok monster. Yeah, when I say look at the dividends, how consistently has JEPI and JEPQ increased their dividends? If they're not consistently profitable for at least 2 decades, for me, it's a no. Okay, Jimmy Monsieur. Okay, can I explain 1%? Yes, I can. Are you ready? 1%, 2%, 3%, 4%, 5%, 6%, 7% more. 1% is 1%. Okay? 1% of $100 is 1. 1% of $1,000 is 10. 1% of $10,000, well, that's 100. 1% of $100,000, it's 1,000. 1% is 1%. I don't know what you need the explanation for. What about EIX? Hell no. Do you have a Discord? Yes, I do. I have $500 to invest right in E-Trade and don't know what to do. KLL, my suggestion would be education. Educate yourself. LL, quality or quantity? You have to come up with a strategy. What is it that you're looking for? And don't just say you want to make money. It has to be more specific than that. The better questions you ask, the better results you're going to get. I don't see the question that he's replying to. Okay, you do realize these questions, I have no idea what you're seeing. What I'm seeing is a bunch of questions. Now, as they come up, they keep going like this. Okay, I have to stop them and read them one at a time. Okay? How about National Grid? No. So you only look at 20-year companies with increased dividends. Oh my goodness, somebody actually got it. Yeah. How do we get that screener in Yahoo Finance? You don't have to. Okay, grab a piece of paper and a pencil. Are you ready? Dividend Kings, 50 years of increased dividends. Dividend Champions, 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. That list right there will give you over 300 different companies. And also, just for the fun of it, why don't we throw in Warren Buffett's list? You can go to Google, Warren Buffett's list 2025, and it will give you every single company. Okay, go to Google, Dividend Contenders list 2025, because this we're in 2025 now. It will give you the list for free. Bryce, UNH, the University of New Hampshire, no. BHP, no. What do I think about old 401ks? I'm 46. All right, my idea of a 401k, okay, you're giving your money to someone else to do it for you, unless the company is matching you dollar for dollar. Do not put it in there. Put it in a self-directed IRA that you direct yourself. Make your own choices. Become responsible for your own money. Do I invest in cryptocurrency? No, I don't. Now, what is my opinion of cryptocurrency? That's a great question. I love the idea of cryptocurrency. I do. Give it to the people. Get the greedy fingers of the bankers and Wall Street out of our pockets. I think it's a wonderful idea. At this moment in time, I can't use cryptocurrency to fill up my gas tank, to buy my groceries, to pay my bills. Doesn't make sense. There is no way to get a safe, predictable, consistent income from cryptocurrency unless I want to sit in front of the computer all day long, and I don't want to do that. How much do I need to quit my job and full time? Okay, Anthony, you actually have to figure that out on backwards. Hey, Rich Bruner, what are you doing here this time of night? Do you pay interest on the unused margin account? That's a good question. That's one of those questions I really don't think of, but that's good. I should probably think of that one. Okay, so Anthony, how much do you need? Well, you've got to figure out what are your monthly obligations. How much do you need on a monthly basis in order for you to quit your job? Okay, and then figure out what trading strategy, at what percentage, consistently, predictably, can I do in order to quit my job. For me, I make 1% every single week. That takes care of all my bills. It allows me to live the lifestyle that I like. Love the info. Glad you like it. What stock applications are you using on the screen? That, Jose, is Think or Swim. It's available through Charles Schwab. What's my YouTube account name? The 10-Minute Trader. Thanks. I'll check that out on YouTube. It should be in the bio. Holy shit. I'll answer the questions. You haven't changed a bit. I'm not supposed to. Well, actually, I have. My hair's a little thinner and it's a little gray. Jose, these are old comments. You end up answering them before getting to them. I'm terribly sorry. Okay, so you got to remember, there's 7 different platforms: Facebook, Instagram, TikTok, YouTube, TikTok, another YouTube down here, Rumble down here. I'm getting questions from everywhere. So you ask me a question, I'll answer it. Now I stop the scrolling of the questions so I can read each and every one individually and answer every single question. Okay? I used to hate it going on to a live show, asking a question and never getting an answer. So I read each an individual question. So when you ask a question, it comes into the queue at the bottom, and then they slowly scroll up. I answer each one at a time. That's the last question of the evening. I am out of here. You guys over on the West Coast, have a great night, and we'll see you again tomorrow. Come on. There we go.